So begin with today's topic. Well, gold has been soaring to new highs in the last 6 to 8 months, and thanks to the uncertainties all around the globe, which is the COVID-19 pandemic, US-China relationship, question mark on the economic revival, and so on. So the rally has become more intense, and since gold has delivered equally compelling returns than other asset classes, it has been gaining a lot of traction among investors. So gold as an asset class does find its way into portfolios due to factors such as high liquidity and providing hedge against inflation if held for a longer period. So in our country, like we all know, gold has a high consumption primarily because it is the most common form of gifting. And gold and silver prices rebounded today in Indian markets after taking a breather in the previous session. So October gold futures were up 0.83% to 53,216 per 10 grams, while silver futures surged to 1.4% or 865 to 63,535 rupees per kilogram, and gold has hit new highs this week, driven by a rally in global markets, of course. In the previous session, silver had slumped over 4% or 2,762 rupees per kilogram, while gold had edged 0.4% lower. And in global markets, gold prices were steady today as a softer US dollar and concerns over mounting coronavirus cases supported the safe haven demand of the yellow metal. And spot gold was steady at $1,958.99 per ounce, while US gold futures rose 0.5% to $1,953. So far this month, gold is up 10% this month in global markets, its biggest percentage rise in close to over 4 years. So there are a lot of questions that might be lingering in our minds, and to answer all those questions, I have my colleague Arun Sundaram, who will be joining us on the phone line. Many thanks for joining us, Arun. And my first question to you today is, the current macroeconomic environment is perfectly conducive for a rally in gold prices, but how do you read interest rate figures, dollar movement and inflation to understand their impact on gold prices? So what is the current outlook for gold?
Well, it moves in a cyclical fashion, Deepak. Good afternoon. Let me try to simplify the matters for you. How does it work? Typically, you would like to keep money in an asset from where you can withdraw it easily. The most common form of saving is therefore what is called as a savings bank account or a fixed deposit, which you maintain with a bank. Now, what has happened over the last, say, 3-4 months post the outbreak of the COVID-19 pandemic has been the fact that interest rates have been going down. So you have to now, therefore, move your money out. The idea of keeping money is not to have just idle funds. It should earn some interest. So what you do is you look around. Precisely that is what has happened. People have looked around, they found stocks. Look at the kind of rally that you saw in American stocks. And then when the rally looked like it was getting exhausted, they looked at other options of investing, which included even cryptocurrency, primarily Bitcoin. The rally in gold has been very pronounced over the last, say, 6 to 8 weeks, because remember, gold for a very, very long time, I mean, Bitcoins or cryptocurrency are of recent origin. Gold is known metal for ages, for thousands of years. People have reposed faith in gold. And therefore, if gold prices have rallied, it is but logical that people will gravitate towards gold, because gold is something which finds universal appeal. It could be Adelaide or it could be Alaska. Wherever you go, you will find somebody who is willing to buy gold and somebody who is willing to sell gold. Therefore, this rally in gold is again a manifestation of what is considered to be a safe haven asset, and which, where you invest in, leads to certain tangible returns over a period of time, Deepak.
Right. Also, Arun, my next question is, what are the forms of gold that is available for investment, and what form of gold is the best for investment?
Well, it depends. It's very difficult to answer this question, because gold today is available in multiple forms. What you know of in India is the physical gold in the form of jewelry or gold bars, etc. Physical gold, India is clearly the leader. We have unofficially at least about 20,000 tons. Now, when you say 20,000 tons, you may be dismissive, but let me put it this way. It is much more than the collective amount of gold which is present in the Eurozone, in China, and the US put together. So one greater than three. Now, that is the most common form of holding gold. But then there are newer methods available. Exchange-traded funds, for instance, are a very popular means of saving, not just in the US, but even across the world. SPDR Holdings is a leading ETF as far as gold is concerned. Then you have gold ETFs, which are available in India. You also have something called as the Sovereign Gold Bond Scheme, SGBS as it is called, which is nothing but paper gold in the sense that you invest in this, you buy a minimum of 1 gram going up to a maximum of 4 kgs. In return, you are given what is called as a holding certificate. You don't get physical gold. And you can redeem it after a period of 8 years. That's the SGBS. And then you also have gold coins and gold bars which are available for sale. You have it in 1 gram, 2 gram, 5 gram, 10 gram, etc. So there is no kind of, restriction in the quantum or type of gold that you could invest in. The variance in terms of price is minimal at best, Deepak. All forms of gold have their own advantages and disadvantages, Deepak.
Okay, also Arun, my final question, and this is the million-dollar question right now. Is it the right time to invest in gold given the kind of situation that is prevalent across the world and in our country as well?
Well, it depends. I mean, gold is a safe haven asset. At any point of time, an average Indian household, however poor it be, has some quantity of gold. Even the poorest of poor, if you were to look at a married woman, they have gold which is present in their Mangal Sutra.
Right.
So, at any point of time, it is a good asset. There will be people who will say that gold does not give you returns, etc. Gold is a safe haven. It is accepted at a time when there is floods, at a time when there is drought, at a time when there is pandemic, at a time when everything is normal.
Right.
You can still sell gold. There will be a buyer for gold. There will be a seller for gold. Gold is universal. Your exotic assets like cryptocurrency, etc., they are of recent origin.
Right.
Stocks, you don't know how it will perform. But there is a belief that if this metal, yellow metal that you're showing, a bar of yellow metal that is genuine, it will fetch you something. Whether it fetches you the earth, the moon or the stars, that's not a question. It will fetch you something. It is tangible. It can be converted into ready cash. Gold is something which has universal appeal, and 130 crore Indians will vouch for it, Deepak.
Right, Arun. Thank you for joining us with all those insights, and thank you for answering some of those questions which required an answer because people were in a dilemma whether or not to invest in gold given the kind of situation that is currently present in the nation, in our state, and also across the world. So like Mr. Arun said, gold will fetch you the value during times of flood, drought, or even inflation if you hold it for a longer period. So there is no required, or there is no given time or a situation when you'll have to invest in gold or not. Whether you invest it today or tomorrow, it will fetch you high returns, and it has in the past delivered equally compelling returns than other asset classes, and it has been gaining a lot of traction among investors. So guys, don't think about the time or the situation. If you feel like investing in gold, any time is the right time because gold never ceases to give you the returns it promises. So go out there and start investing because you might need it in a future date. With that, it's a wrap on this interaction, and until next time, see you guys and take care.